We just had a great trade on gold, and here's crude. If you look into, well, let's go crude oil, Gerald. Look what I posted right there this morning at 7:59. At 7:59, I posted in the chat room that was right at this high, exactly right on it. We were trading right at 10. And I said, we're into a stack level. Stack level for the short, and that was exactly the high. How can you project these levels? It came all the way down to the control point on crude. How can we project to short that high knowing that we have a real big resistance at this stack level? What we do, guys and gals, is we use two charts in the trade room. And this works on all markets. It doesn't matter what it is. It can be the S&P 500, Russell 2000, Dow Minis, NASDAQ futures, whatever you trade. 30-year bond, doesn't matter. Crude oil and gold, same exact setups. We use two types of market profile in this black chart. I got my solid lines are more volume-based. They've been around since 1994. My dashed lines are more price-based. They've been around since 1985. So I use this black chart for more volume and price-based profiles to find resistance with overall trend retracements. I use this trend filter, these two moving averages. Now, moving averages to me are absolutely worthless. You cannot trade off of them because they are lagging indicators. You can use them for trend direction, though. The most important moving average is this magenta moving average was flat. Our smaller moving average was crossed down, so we were in a mild downtrend to flat market. My methodology says sell high value area with negative market delta. The reason you want to look for stacked areas is you want to see if these two profiles, this volume base, which is a solid line, and price base, which is a dashed line, can stack over top each other like it is on the control point here. You want them within a couple ticks of each other. It's a real nice stacked area. I have one more market profile that we use, and it's on this white chart. So I use the black and the white chart to find my setups. And I use this gray template. These templates are already pre-made for you if you want them on your own charts on any market. I use this gray template to look for an order imbalance at that key level. So what I noticed when I posted live right exactly at this high, we're ticking exactly right at the high. If you go back on the chat room, I posted we're into a stack level right here, right at the high. What was happening was I was hitting my high value area on my volume profile, my black chart, and over here on my J signal chart, we call this J signal, it was hitting the high value area, which is also red also, on my developing profile. So on this white J signal chart, I have developing profile, which is red is HVA, green is LVA. Then on my black chart, I got more volume base, which is red is HVA, solid line, solid blue is control point, solid green is low value area. Then I got my red dashes. Red dash is high value, control, low value green. So all red is high value, all low is low value. Very easy to remember. If I got red stacked on top red, I got what's called confluence or stack level. And this is a stack level. That's a stack level. I got 2 times stacked. I've got my 51, just over 5110 is my volume profile. And my developing profile is at 5110 also. I got 2 levels stacking over the same price point in time at this exact price point, and that's when I typed it in the room to look for the short. Because we are in a downtrend. You sell retracements. Now, you can it's almost 3 times stacked because I've got my 5119 up also. So this is a big area for a short. The 2 times stacked was right here. Now, how you can time the trade, if you want to time it to the exact bar to get in, we use my market delta. So my methodology, what we're doing is we're using these 2 charts to see where these profiles stack on top of each other within a couple ticks. 3 times stacked is the best you can get. There'll be days you come in this room where these levels will be stacked within a couple ticks. you have price, volume, and developing on my J signal all stacked on any given market right over top each other. That becomes a brick wall. Very hard for price to get through it. So what we do when we come into a stack level, you look for negative market delta. Now, negative market delta, any delta over 200 is a big order imbalance. Now, we had one earlier at 299, but it's a one stacked area, not 2 times stack. Almost 2 times stack there, but let me show you how you do it if market delta turns the other way too. I'll show you that in a second. So if we get 2 times stacked at that level, almost 3 times stacked because we're coming into the resistance up top, you can enter your order right exactly at the close of this market delta bar. When it closes red, you can open it up. So that's going to open you up on a fill right there around 5101, 5102. So your fill is going to be right here. It's usually at the bottom right of that bar, at the open of the next bar. So your fill is like 5101. All right. Anything over 200, I use a Renko bar. We have a proprietary Renko bar we use. We don't use tick charts. We don't use volume charts. We don't use range bars. They don't work very good on market delta. They don't give you a really true reading of the commitment on a sell side or buy side on traders or order flow. I use a Renko bar. I only use a 5-sim Renko, my longer term Renko on crude oil. This is all I use. I don't use any other Renko bar other than this on crude. There's 259 that told you get short at 5101. We use a hard catastrophic stop of 15 ticks. After you enter your order, you can lower your stop 2 ticks on any given trade above the swing high or swing low after entry. So your stop is going to be 2 ticks above that swing. So right there, the swing is 5111. 5111 plus 2 ticks is what? 5113. So I got a 5113 stop and I got a 5101 fill. So my stop is 5113. My entry is 5101. That means I have a $120 risk on this trade right here. From stop to entry. There's my risk. Your target, what you want to do on your targets, you want to go the first set of symmetry dots over here. I have symmetry dots. I designed, the hardest part for me is never entries. I can pull up any single market that I've never even traded before, and I know my entries to the exact bar using market profile, market delta, without any experience in that market. Because I know market profile is going to give me the support and resistance if it's stacked. And I know it's been working since 31 years. I know that's going to give me the resistance and support. And I know market delta is going to give me the order imbalance. So if I know that, the hardest part for me is when do I get out? Entries are easy. Exits are more difficult. So what I did is I designed symmetry dots. Symmetry dots over here on J signal. I have blue ones. You see blue little dots and red ones. These dots are leading. So when this was a short right here at the high with negative market delta, exactly at the high, that's when I came out and said, that's where the stacked area is, right when it's ticking live, right on it. Negative market delta got us in. This symmetry dot popped up. It's a leading indicator. That tells me I can sell 2 ticks above that symmetry dot. So the symmetry dot was 86. 86 plus 2 is 88. My order on my dome can be 88 to get out. So not only know the exact bar to get in, I know the exact bar to get in with market delta is a close of this market delta bar, 5101. Not only do I know my exact stop, which is 5113, 2 ticks above the swing high, but I also know my exit. My exit is 51, what? Or 5088. So I just took that trade down from 5101 to 5088. Okay? That's a 13 tick first target trade. My first target's now off. My next target, you can have your dome automatic, break even plus 1 if you want. Now on flat days, I like break even plus 1. See how flat this magenta moving average is? On trend days, I'll leave my stop 2 ticks above that swing high until I get to my second set of symmetry dots, and then I'll start adjusting because I do not want my runner taken out if this angle on this magenta moving average is hard down. What an angle is like this. If I get an angle like this on hard trend days, I'd let that sucker run. Run as far as you can. I had a 45 target yesterday on yesterday's sell. Here's a sell at 50.55. Earlier, it came out on the second sell I had. There's my second sell. The first sell was my J signal, got me all the way down to low value area. My subsequent position got stopped out, reshorted up here at 50.50. I said the target yesterday was all the way down to 45. Look how close I was. The low was 40. Almost over after the fill, 100 tick trade at the high when my target was 45. How did I pick 45? My low value area. Called it. Same way today. High value area, called it. Just like high value area over here, called it yesterday. Price profile in a flat market, called the high. Yes, look at that. Called the high yesterday for almost $1,000 trade. Today, price profile called it. Today, volume and developing profile called it, as they were stacked with negative market delta. Now, your target, your overall second set of, what I like to do on hard trend days, I like to go to my third set of symmetry dots. That's the best. Hold on, Gerald, almost done. My third set of symmetry dots. So on my second set, on flat days, you're trying to get down here to the second set of symmetry. So you want to try to get down here just below. We're going to pop up here in a second. Once you break these symmetry dots, we have more symmetry dots to go for. So your second target can be either low value area all the way down here. Your goal is to go from high value to low value. That's what you're trying to do. You're trying to get from high value to low value. But on hard trend days, they'll blow right through that low value and keep going. And your target is a third set of symmetry dots, which should come out to around $750 per one contract. So you're trying to risk on trend days right around 120 bucks, but you're trying to get around $700 out of the trade. On flat days, you're risking around 120 bucks, but you're trying to get pending. What?
Order filled.
120 to 240, $250 on the trade per one contract. Okay? That's how I trade it. I look at these two different support and resistance charts. I use market delta to pop me in the trade. All right, Gerald, go to gold real quick. Gold was a really nice one. Really nice trade. I mean, it just doesn't get any prettier than this. There's your short. Look how pretty this short is. What it did is this J signal chart is very simple to trade off of. If I get below low value, so you can see we're in a downtrend in gold. Or look at my trend filter. It was in a downtrend. Once you get below low value right here, you cannot take any buys. You're not allowed to take any buys below low value area on J signal, my white chart. You can only take sell retracements. So it got below, and this is a perfect short. It broke, retested. It was also volume profile. I had 2 times stacked area right there. My volume profile, which adjusts with price over here, the solid green line, it was sitting exactly right on top, exact high to the exact tick. To the exact tick, volume profile was 55.60. Consequently, my developing profile was right here at 55.50. I had 2 times stacked area on this retracement. So what do? I look for negative market delta. Look what market delta did. It was just absolutely gorgeous. Check it out. Market delta turned. There's my retracement. Turned positive market delta. Broke through low value right here. My next bar was what? Negative market delta, negative 65. Now, what do I do on gold? I only use my Renko bar, my 4-sim Renko bar. I don't use any other Renko bar for gold. Anything over 50 is a negative, a big order imbalance, negative 65. Thanks for coming to work. There's your trade from gold. Your gold entry was right here. 54.30 fill. Got as low as what? 51.30. Right? $300 trade per one contract on gold. And you knew the exact bar to get in. Your stop's the same way. You place your stop 2 ticks above the swing high. What's your target? Now, here's how I do it. I just showed you how to do this. My first set of symmetry dots, my first target, boom. My second set of symmetry dots, because what I just tell you, it's trending. You want to go for the second set of symmetry dots. Second set of symmetry dots calls almost the exact low. So that $300 trade, I knew the exact entry to get in, the exact bar with market delta. I knew my exact stop was 2 ticks above that swing high. I knew my exact first target is 2 ticks in front of the first set of symmetry dots. I knew my exact target on my second set of symmetry dots, 2 ticks in front of my second symmetry. So you know your entry, you know your exit. and you know your target. And you cookie cut that every single day on any given market that you trade. It doesn't matter which market you look at. Any single given market that you trade, you look at that exact order entry. You know the entry, you know the stop, you know the exit to the exact bar. Okay?